Start with you and just get your thoughts on the first session of the week.
Well, a massive session for the Australian share market. First of all, on the US, we saw big decreases with the markets over there down as much as 1.5%. And then over the weekend, the announcement from China that we will be seeing the reserve requirement ratio down by 1% at 18.5%, effectively unleashing about $200 billion worth of liquidity to the Chinese economy. And really, I guess traders and investors seeing this as a global trend, the race to debase and the falling interest rate environment that we are seeing globally. Now, this of course is good news for defensive, high-yielding stocks, and we certainly saw that playing out on the market today. The telecom sector, the only sector to be in the black today, and we also saw defensive stocks like Japara Health, Invocare, National Storage up around about 2%. So all in all, a little bit of a roller coaster ride for the Aussie share market. We were down as much as 1.2% in the morning before finishing down 0.8%, but the region overall outperforming given the moves that we've seen from China and also the US S&P futures up by 0.3%.
Yeah, I think we're seeing some macro fears dominate. I mean, obviously Greece continues in the background to be somewhat of a concern.
I think there are a couple of things that are dominating investors' minds at the moment. One, as you mentioned, is Greece. Now, we are watching Greece for a possible default there. This isn't as big as it's been in the past, and that's because we've known about the risks here for a while. So I guess those countries which do have exposure to Greece debt have been able to manage those risks. Now, Greece is due to repay about 2.5 billion euros worth of debt to the IMF, but they're saying they're going to withhold that payment unless they come to an agreement. So effectively moving towards a default in terms of debt. But of course, what's changed now from a couple of years ago is the fact that the European Central Bank has been willing to act as a backstop, and the market's expecting this. So I don't think the fallout is going to be as big as what it would have been possibly in 2010, 2011 if we saw a Greece or a Brexit happening on the cards. But I think investors are a little bit cautious given the backdrop of Greece, and also we're still in the middle of US earnings season. It's still a quarterly earnings season in which we are expecting to see negative growth taking hold. So that still dominates in terms of the US market. So the US stock market still looking quite cautious. We haven't seen a new record high for more than a month now. And of course, with the backdrop of just those big declines that we saw on Friday, I think investors are just a little bit cautious given the great moves that we've seen in 2015 so far.
Ground as well, largely in the resources space. Arium having a bit of a shocker, down almost 12% today.
Well, Arium's very highly leveraged to iron ore, and last week it had a very good week with iron ore prices up by 4.2%, the Aussie dollar actually trading down, and of course Arium shares gaining 13%. Today, unfortunately, the focus was really on the all-in costs of Arium versus the realised price of Arium. And if we have a look at the quarter's all-in costs, they were about 66.90 Australian a dry metric tonne compared to the average realised price of 58 Australian dry metric tonne. So altogether, it looks like current prices, Arium is making a loss. And unfortunately, this is one of those companies which has a number of businesses. It has its iron ore business, its steel making business, its mining consumable businesses. And in each of these areas, it doesn't really seem to have a competitive edge. Iron ore, it invested at the top of the cycle, more when prices were around about 170 US a tonne rather than closer to the $50 mark. And it invested in assets which are very short mine life, so it needs to replace these assets as well. It's at the higher end of the cost curve in terms of producing iron ore compared to the likes of BHP, Rio Tinto, as well as Vale. And then, of course, in terms of its steel business, there's no real economic moat, no real competitive edge. It's really a matter of price here, and we know that the steel business has been pretty tough as well, and the Aussie dollar now at 78 US cents. So unfortunately, we did see Arium shares falling quite substantially today. Of course, this is a leverage place on iron ore, so if you do see iron ore prices moving up by only a couple of dollars, this is going to have a big impact in terms of Arium's share price in a positive manner. Unfortunately, over the past year, it's been a case of iron ore moving in the wrong direction, and we've seen Arium prices share price losing around about 80% in value.
And Julia, Osman Minerals as well, some production reports, and also coming out with seemingly some results from a business review, and it looks like spreading their wings into other base metals.
I think Oz Minerals is one of these companies which does need to buy assets, and that's to replace mine life and really develop another asset. At the moment, its key asset is Prominent Hill, and it's its only real producing mine. It has Carrapateena, but of course it would require a lot of capital investment to be able to develop that asset. So it's essentially a one mine company and a one asset company. We have a look at Oz Minerals. You really want the copper price to move in the right direction. It has been over the last 3 months. I mean, copper prices are up by 5.5%, while the Aussie dollar is down by 4.4%. So it's almost a perfect scenario for Oz Minerals, with the copper price moving up and the Aussie dollar moving down. And of course, Oz Minerals share price has been moving in the right direction as well, up by 14%. So we really need to see this bullish case for copper so they can develop this Carrapateena asset and essentially become more than just a one-mine company. But not surprising to see that they are looking to pick up assets. There is some strong cash flow coming through here, but all up, this is all a copper and an Aussie dollar story.
Yeah.